All right, time now for Three Stock Lunch. Looking at some big movers of the day. American Express surging after issuing upbeat guidance, raising its dividend. Chewy higher after an upgrade to outperform at Wedbush. And Intel, yikes, sinking on a brutal earnings report. Here to help us trade them all, Craig Johnson, Chief Market Technician at Piper Sandler. Craig, let's start with American Express. What do you see? What do you say?
You know, fundamentally here, you just look at the American Express and things are better than what people have been expecting. Credit trends are better than they've expected. And you come back and you start looking at the chart, you got a great downtrend reversal back above your 50, 200-day moving average. From our perspective, this is a stock that looks terrific. And on any sort of pullbacks back toward the breakout levels, back toward that 160-ish level, we think should be bought.
All right. I am tempted to dwell on this and ask you, all right, let me just throw the Visa at you then. What about that one?
In terms of Visa?
Yeah.
Visa still looks like another constructive-looking chart. We're seeing all these credit card companies between Visa, MasterCard, Capital One. Again, the credit quality trends are stronger. And so a lot of these charts still continue to look very constructive. And from our perspective, Visa is certainly moving up in sympathy with what we've been seeing with American Express today.
Yeah, that's what I figured, just making sure it was across the board. Let's move on to talk about Chewy, up 4.5% today. What about that one?
You know, Chewy, the number one sort of player in the pet category at this point in time, has been in this kind of 7-month consolidation. And from our perspective, this is a very interesting looking chart. I know it's neutral from a fundamental perspective here at Piper, but technically we're just about to break topside of this 7-month consolidation range. And we would be a buyer of Chewy here on a topside breakout.
Up 5% today, as you see right there at 46.20. Let's move on to I guess you'd call it the dog of the day. That would be Intel.
Yeah, in terms of the semiconductors. So we like the semiconductors across the board. And if I like something like the SMH, it's making a very nice bottoming pattern. And we continue to think that semiconductors should be bought. Now, Intel specifically, they got some challenges. It looks like it's a little more specific to Intel than not. But from our perspective, we are coming back to an area of support. I'm not ready to buy it yet. There's other names I'd rather buy than Intel right now, that being CLAC and AMAT and ASML and NVIDIA and Qualcomm. But Intel, for me, got to wait to see if we can hold that support. It's down, not recovering. Very different than what we saw with Microsoft earlier in the week that did have an earnings miss, but was able to recover throughout the week.
Maybe have another one of those martinis while you wait.
Absolutely.
One of those ones that's already been emptied over there.
Some people think you need a drink, Craig, if you still think you can be that bullish on the market this year. Make the case for us. I mean, yes, we're seeing some green shoots right now. Absolutely. But make the case that the market can kind of move throughout all of the economic events that may be to come and close this year higher. And again, I know you're looking at this from a chart basis, but how compelling does it look to you?
Well, Kelly and Tyler, keep in mind when you talk about having another martini for lunch, it is always 5 o'clock somewhere. And that's always been our thesis in this market. There's always something to do. And in terms of why we think this market can ultimately continue to move higher in here is simplistically this. One, we're finally technically seeing a reversal of the downtrend resistance line we've been seeing on the S&P 500 and frankly, a lot of the popular averages for more than a year. We're finally pushing through that. Second, the breadth of the market is improving. The number of stocks in uptrends, in confirmed uptrends in our work, the number of stocks making 26 and 52-week new highs continues to expand at this point in time. And then lastly, I'll just say this. Again, there's $4.3 trillion of cash sitting on the sidelines. And the higher this market goes, the more pressure there's going to be for investors to feel the FOMO, the fear of missing out. And as that really starts to unfold, it's going to drag people back into this market. And again, most portfolio managers didn't have a great year last year, can't afford to get too far behind the benchmarks early on here in 2023. The market will go higher. No change with our year-end objective of 46.25. And I think in the near term, a move toward 42, 4,300 is probably in the cards before you get a deeper pullback.
Very interesting, Craig. The case made then on a technical basis for higher stock prices. Craig Johnson, have a great weekend, sir.
Thank you. You too.